S&P 500 as we get ready to trade July week 3. And we're getting ready for earnings season to start when JP Morgan reports before the bell on Tuesday. And then by the time we get to the end of the week, we will have heard from all of the big banks. And on Thursday, after the bell, we'll get the first component of FANG reporting with Netflix earnings. And I think that's an interesting dynamic that since it's monthly OPEX and the S&P 500 options only trade through Thursday's close, if you're trading those July options, you're never going to get that reaction to Netflix earnings on Friday. So I would not be surprised to see their premium being a little bit elevated, more so than usual for those Friday end of day options. But as the week goes on, just remember that you're not going to get that reaction to the Netflix earnings unless you, by way of using the S&P 500 options, unless you're buying the Friday end of day or thereafter expiration. Okay, back on the roadmap here. Our main focus this week was trying to keep our head above this 31.50 to 55 area, and this comes from over here to a little bit to the left of last week. You can see that once we gap down open after the Fed meeting, the FOMC meeting at the beginning of June, all of our bounces came up and sort of got shut out on us around the 31.53 to 55 level. And sure enough, this week, we were coming back and we were back testing this area to the point of where our halfway back on the week, when all was said and done, when we take our low that was set on Thursday's sell-off to our high that we broke out to at the end of the day and closed up on our high for the week on Friday, when we add that high and that low together and divide it by 2, we get 31.5126. So from this low, once we crossed this 31.51 level, we doubled up on the week from there to mark our high and our close on Friday. So when we come into next week, what we're looking for is to be as straightforward as possible. We just want to make sure that we hold above this 31.51 to 55 area, which was resistance and now should be support. Once and for all, we took our one big fall down below this, opening on it on Thursday and selling off down to this 31.15 level, and then we reversed, and by the time we got to Friday, we took one more look below, but we held this same low at 31.36 that we had held on Wednesday and reversed from there, and we went on back up. I want to talk a little bit about what happened on Thursday. I wrote about this, in the threads and everything, and in the note that I put out for Friday morning. But the reason for our low and why we probably broke down below this 31.36 in the first place, didn't hold this previous day's low, is what we had a gap to the July 1st close here that we filled, and we literally filled this plus 1 penny and reversed on a dime there, pennies and dimes. Reversed right there for our low on Thursday, and that was filling in this gap perfectly to the July 1st close. July 1st is our closing low for the month, the quarter, the new quarter, and the second half of 2020 so far. So there were a lot of interested buyers there that reversed us pretty hard. When you look at futures, when we were off for the 4th of July holiday, ES had traded down to the equivalent of a look right around this close. They traded down to 31.05 and change, and you subtract you add the 10-point spread. Add the 10-point spread for the S&P 500, and that gets you right to this gap fill. So the market wanted to get back down there and resolve the fact that ES had the nerve to go and trade that while we were off on the holiday, and the S&P has never gotten the chance to get back down there and trade it as well. So we resolved all that, took a 1 penny look below this gap fill and this close here, and we took a 1 tick look below that level that had traded at the low while we were off for the holiday, and everything reversed. So I think that that's what this was all about, because all of this was happening in the face of this going on underneath us, this golden cross with the 50-day crossing up through the 200-day simple moving average. As the week went on, CNBC picked up on this and commented on it. There was a Bloomberg article that was posted on Twitter, and I retweeted it for you guys on Friday. And that particular article went so far as to say that this has been the buy signal that has been signaled the end of every bear market in history for the S&P 500. Once we get to the point where the 50-day is rising and the 200-day is rising, and the 50-day crosses above that 200-day, that has signaled the end of the bear market. So for all the sideline fund managers who have been sitting things out, this is it. If they're not in now, they've got some explaining to do to their boss and to their customers when the end of the year comes around and they have not had the performance, or they have not outperformed the market, or they have underperformed the market. Okay. So anyway, let's get back to what's happening right here and right now. Our high that we got to on Friday was just shy, finally, of closing in this gap completely to the close that we made on the Fed meeting that began this gap down. 31.90.14 gets us that gap completely filled, just as this gap got completely filled last Thursday. So just above there is this 31.93 level. This was a big level of support and resistance as we were in these highs, coming up to these highs here in June. If we can get through there, we have an unresolved high that was made last week in ES, just as this unresolved low had been made while we were off during an overnight session last week. The ES got up to a point that would, if we're still using this 10-point spread, that would get us to 31.94 on the S&P. I have the feeling that we're going to take care of this. We're going to get up to that 31.94, but that's what's going to sort of stop us cold next week, at the beginning of the week, while we wait on JP Morgan. And then if those JP Morgan earnings are good, I think we're going to gap up open over 3,200, and we're probably going to be looking at a new high for the S&P, as long as those earnings are good and as long as the outlook is good from Jamie Dimon. Okay? If things are bad, then we're probably going to be looking back at, trying to deal with one more back test of this 31.51 level, which wound up being our halfway back in the week. As the week goes on, the 10-day simple moving average is going to be rising up pretty fast. It's going to be right about here on Monday. By Tuesday, it's going to be right about here at our 31.51 level. So if by chance those JP Morgan earnings are not good, or if they are good and the market wants to pull one more rug pull on us, I think maybe we'll come back down here, test where that 10-day simple moving average will be at the time, and it will also be the halfway back of the previous week's range. And as long as we hold above this halfway back, we are holding above this area of resistance and making it, support now once and for all, holding above that 10-day. That's going to be your ultimate dip to buy, and I would buy the most expensive calls that you can afford, meaning that at this point now, when you're buying the 3200s or the 10s or the 3220s or the 3225s, so on and so forth, you're expecting, when I buy an S&P 500 option, I want to buy something that can possibly go in the money during that time period that I'm holding it. I don't want to buy 3300 right now. Really? Are we really going to trade up to 3,300 next week? Is that what you're saying? So that's why I don't buy options that far out of the money. And the same thing with puts. Right now, buying puts below 31.50, maybe at the most below 31, down here to 31.15. You're saying, what is going to be the catalyst that's going to break us down to that lower low, more so than what we saw last week? Okay, so that's what I'm saying with that. So you really want to use this as a great opportunity to buy, maybe get back into those 3,200 calls one more time. Those have been the volume leader for 2 weeks, 3 weeks running. If we get a dip back to 31.55 to 31.51, I think that's going to be a great buying opportunity, a test of the 10-day simple moving average, a test of this area that we know has been support resistance, and a test of the halfway back point of last week's range. And I would be looking for those 3,200 calls if you can afford them. Maybe they'll be $11 by that point. If we get to like Tuesday or Wednesday of next week, maybe they'll be decayed down to an $8 window. I don't know. Or if you can go into the Friday end of the day options, even better, because then you can play what happens with Netflix earnings. Also, another thing I just want to remind you to always do is to look back at your weekly chart. Anytime throughout the course of the last few months, anytime we start to dip into the previous week's candle range, you can see here, we took a tiny little look below this level and boom, we had a huge set of buyers. And then we reversed that all out the following week and traded lower. But at our low, we reversed and came back up, and we made sure to just squeak in a close above the previous week's open, so that these candle openings and closings on a weekly basis have been really good markers of support and resistance. Here you can see we had a big gap down open on the week, but as soon as we came back and retook the previous week's close, we rallied up quite significantly. And the next week was just inside of the previous week's range. And then here, this week that we just traded was a look down. Once we had broken down below 3130, I warned that we go into bearish reversal on the weekly time frame, so the whole candle was red to this point. And all we did was got a little dip below there and reversed and came back up and wound up with a nice big rally. So always look to your weekly time frame, and if you're doing it on the S&P 500, why not do it also on Netflix or Tesla or whatever individual stock you're trading, and see how that works for you as well. I bet it helps a lot. Finally, one last thing I want to talk about are these window prices that I'm always telling you about. This is where I always try and buy my options at that $5, $8, or $11 window, or a multiple of that $5, $8, or $11 window. And here was the 3,200 calls last week, Thursday and Friday. On Thursday, at the market low, these held the $11 window. Look at that. They held and they churned back and forth in here at the $11 window and took off. And then on Friday, the first low of the day, they held at $12.90. They didn't even look below 12 and into the $11 window. And then the second chance to buy these was when they came down here to $15.50, and then they took off. And by the end of the day, you had made 10 bucks on those. And then the next call I was looking up to were the 32.25s. This is the maximum out of the money that I want to go right now, because we still haven't made it back to 3,200. And if I'm going to go above 3,200 on a call, I don't want to go so far as to assume that we're going to be making a new high above 32.33, which is our bounce high so far. So these 32.25s, the volume rising in them, it becomes more justifiable to get into these as we get above 31.80 or so on the S&P and get so close to that 3,200 mark. And you can see here at their lows on Friday, they gave you a look above the $5 window. They didn't even look below $6 and into the $5 window. And then your next chance to buy these was a look into the $8 window. Here's the $8.90 price. You can see they looked into the $8 window, held pretty strongly, and then took off from there. And by the end of the day, they were up here at the $15 window. I threw some bids on these. I was hoping maybe they would get some sort of weird flush, where they'd come down to maybe look above the $11 window again. So I was bidding like $12.80, maybe $13.20 on these, but I wasn't getting any bites. And I had stuff going on at home on Friday where I was too distracted to be looking at my screen to the extent that I wanted to be if I'm buying, $15 calls during the course of the day. And that's what I was looking at on those 3,200s. And then here at the end of the day, after I'd made no trades all day, or got no fills on any trades, I should say, all day, I wasn't going to be spending 15 bucks on a 32.25 call and then hold it over the weekend. So I came home flat, but these are the first thing that I'm going to be looking at on Monday, unless we break down all the way down there to that 31.55 to 51 area. Then I'll go back and I'll look at the 3,200s again. Finally, a great indicator of, I can't stress enough how helpful this has been, but VIX futures, not the VIX, but VIX futures, because VIX futures will show you volume and they trade throughout the night. $30 on VIX futures has been an ironclad, great indication of the line in the sand. Here was Thursday's sell-off on the S&P. You can see this rocketing move above 30 on futures, almost to 32 bucks, and then rolled over, and then we were chopping back and forth above and below 30. When we are above 30, I really don't want to be buying calls. I want to be cautious and neutral the market. When we break down below 30, I'm bullish, but I really need to see 29.45 break for confirmation. This is a level that we just discovered going all the way back to June that has been really helpful to us. It's our confirmation of the bullish move. And you can see here earlier in the week where we broke down below it, but we chopped, and then here was, the turnaround, the sell-off, on Thursday that got futures rocketing up back above through 29.45, above 30 and higher. So here we are on Friday selling off at, VIX futures is selling off at the end of the day while S&P 500 and the rest of the market were rallying, and we closed them out down here well below 29.45, and our next set of levels will be this 27.92. That's the lowest the futures have traded so far for the month of July. And then below that is this level that since April 21st, this was the lowest that we've seen futures trade. It has been down here to this $27 level. Okay, that's it. I hope this helped you out and didn't confuse you too much with me going back and forth explaining those window prices, but I want to take the opportunity to show you that on a chart. And as well, this VIX futures stuff is incredibly helpful when you're feeling kind of queasy buying calls when the S&P 500 is nearly at 3,200. But remember that the NASDAQ has been trading all-time highs since mid-April. And here we are on the S&P 500 still struggling below our all-time high. Goes all the way back to February. Okay. Anyway, that's it. Have a great rest of your Sunday. As always, good luck and good trading.